What's going on YouTube, TikTok, Instagram? Today we're gonna look at some more stocks, but this time someone else is gonna pick them. So Lynn, Aldine, she created an investment strategy and she put out an article about 7 top stocks to buy and hold for the next decade and beyond. And let's see what my opinion on it. So let's look at the article, but before we get into that, I'm not a financial expert and I am just a normal person, and you should always do your own due diligence. Now, I just spend an ungodly amount of time studying and researching about stocks, bonds, real estate. So I like making these videos to help you understand for the basic person. So let's get into this video and look at this article. So here's the article, 7 top stocks to buy and hold for the next decade and beyond. Now, she does go for the average non-professional investor to what to invest in. And it looks like she did a pretty good job. She said S&P 500 last 10 year has 16.6% return, small cap had 13.2%, and a REIT have a 12.2%. And here's the thing, when I pick stocks, if it does not outperform the S&P last 10 years, that you can see right here, yes, if it doesn't do better than that, I will not purchase them, just because if I want to track the S&P, I'll just buy the S&P. I want to try to do better so I can get a better return. Now, she does have 8 main criteria she uses when selecting a top stock too. The criteria 1, the company benefits from long-term trends and has little foreseeable risk of obsolete. That's a great one to have. Criteria 2, the company has above average return on investment capital and durable economic moats to keep it that way. Another good criteria. Criteria number 3, the company has a strong balance sheet, solid historic performance during recession. That's another criteria. I have the same criteria. Criteria number 4, the company is a premium provider. They compete over quality rather than just on price. That's a good criteria. I don't really use that one. Criteria number 5, the company generally has management with long tenure and a focus on long-term results. I don't have this one criteria, but it is a good criteria. Criteria number 6, the company enjoys profitable growth, not growth at all costs, but a combination of sustainable growth and value. That's another good criteria. It's really hard to measure that one, but criteria number 7, the company is trading for a reasonable valuation. It's a fair price for an exceptional company. That's another good one. And criteria number 8, the company is in my personal portfolio. I research and follow it for years and understand various news systems. Okay, those are all great criteria. So let's go on the first one, EPD. Now, I'm going to look at it on MSN and see what I think about EPD. So EPD is Enterprise Product Partnership. They're a rental company or car rental company. Now, the last 1 year, it did a 19.84%. That's a really good one. 16% growth for year to date. 3 years is 43, and 5 years is 52. Not a bad company. Has pretty good growth on it. Now, here's what I need to look at. There is no dividend yield, so I can't add it to my dividend portfolio, but it's a good stock, what I've seen so far. So let's go ahead and look at the finances on this. But before we do all that, let's see. Mm-mm-mm. Finance. So let's look at the finance. Some reason it's not on MSN, so I went to Yahoo. It happens. So I want to track and see how well the finance been doing. So 2022, 2023, 2024 is all here. The total revenue. And they look like they kind of stabled out. So for me, it's not a good stock right here because you can see the total revenue is kind of stabled out. It's not really showing growth. And this is total revenue. This is before all cost. Now, let's look at what is their total expense. So their total expense actually went down from the year before, which is good. So let's look at the balance sheet. Total asset 77. So the assets going up, but what I like to look at is long-term debt, which I don't really use MSN or Yahoo Finance, so I have to look around. Capital lease obligation 307. So it looks like the lease is going up. Let's look at the cash flow. Yeah, I can't recommend this one because if I look at this, the cash flow every year is going down. If you And to me, that tells me a company is starting to struggle, and I just can't buy a stock that's losing cash flow year over year. Now, it does have a good return, and do I recommend them? No, not this one, just because their financial statement doesn't look as good. Their growth looks great, but their financial statement isn't doing so well. Now, let's look at the next one she recommend. Actual EPD is a oil and gas company. So yeah, it's not enterprise. So I was wrong there, but enterprise product. Let's go to the next one. And it is Brooksfield Corp. Let's go back to MSN, product number or stock number BN. And let's see. Here again, let's look at what it's doing. Year to date, it's negative 1.24. 1 year, 17.57. 3 years is 119. And 5 years is 66.7. And they do pay dividend, 0.62%. So let's see what AI says about it. Valuation is 4 out of 6, earnings 2 out of 6, growth is 3 out of 6, historical performance 2 out of 6, and financial health is 2 out of 6. So let's see if we agree with them. So first thing, let's check the revenue. Revenue is 75 billion, 92 billion, 95, 86, and 75 billion. Yeah, they look like they're losing profit share or they're losing customers. So I can't recommend them because would you buy a dying company? To me, jumping from 92 billion to 75 billion in 4 years of revenue, to me, that's like a dying company. Another thing is the gross margin, 62% with a net profit of 4.31%. Now, for a dividend paying stock, I do not like seeing such a low net profit. And they have extremely high operating expense of 56.43%. When I see an operating expense that high, personally, I think the executives are lining their pockets and paying themselves more. That's just my personal opinion. And let's look at the long-term debt. Long-term debt has increased for the last since 2018. So here again, I can't get on board with a company that their long-term debt is increasing. And here's another thing. They are negative free cash flow. So again, they're paying a dividend. They don't have a cash flow. They're in a negative billions. So I can't purchase this stock. I can't recommend this stock because at the end of the day, they're in a negative in the company. Now, what do? They're a global investment firm. So for an investment firm to be in a negative billions, it doesn't make sense to purchase it. Why would you invest in a company that lose negative investment? So I can't agree with that one. And the third one, and this is the last one we'll do, is MicroStrategy. Let's see, MicroStrategy is MSTR. Let's look up the ticker symbol MSTR on MSN. MSTR. So, MSTR, year to date, negative 1.43. 1 year, negative 59.77. 3 years, wow, 395. And 5 years is 209%. So they have great long-term growth, but last few years, they haven't been doing so well. And let's see what AI says. Financial health, 5 out of 6. Historical performance, pretty much a 0. Future growth is 1 out of 6. Earning is 3 out of 6. And valuation is 2 out of 6. They do not pay dividend. So let's go into the finance. So another company that their revenue is kind of flatline. So I am looking for growth companies. And that's one of the things she said she is looking for too. So for my criteria, if we go back to the criteria, is the company benefits from long-term trend and has little foreseeable risk for obsolete, and the company has above average return on investment. So to me, I look at the balance sheet, and when she looks at the balance sheet, it might not be the same way I do. So, and then one of her criteria is the company enjoyed profitable growth. Well, this one has net profit of negative. So for her to put it on there, I can't agree with her right there. Right there, negative 806%. I don't need to look at anything else. Let's see what this company do. They're a Bitcoin treasury and business intellectual company. Right then and there, I can't add that one either. So at the end of the day, like and subscribe to my video. Hopefully that helps you understand stocks a little bit better. And she does have a good article, and she did say she have these in here, her own portfolio, but these don't meet my criteria for adding or recommend. So these 3 stocks I can't recommend you to purchase. There's more in here, but the top 3 I saw, I just can't recommend. Like and subscribe to my video.